think that there are real issues in China now, and they changed really in the last 4 years. And that is that they need a restructuring. A lot of the spending, well, let's say,
Ray Dalio, the founder of Bridgewater and one of the biggest voices in global finance, has issued a warning that's shaking investors worldwide. In an interview with Bloomberg in Singapore, he highlighted serious problems in China's $17 trillion economy. According to Dalio, China is entering a complicated phase, with property and stock prices plummeting, and he believes the country may face a crisis as severe as Japan did in 1990. This is alarming. Industrial production is slowing, and both investment and consumption are at their lowest levels since 2021. With the Chinese government acting slowly to stimulate the economy, the 5% growth target for this year is looking increasingly out of reach. Dalio, who has always been optimistic about China, still maintains part of his investments there but admits that the situation is becoming more uncertain. The lack of more aggressive measures from the Chinese government to reverse this downturn, whether through fiscal or monetary stimulus, adds to the doubts about the future. The Chinese Communist Party is in a delicate position. Its legitimacy is deeply tied to economic growth, but consumer and investor confidence is at an all-time low. The challenge for President Xi Jinping is to restore this confidence without falling into another unsustainable growth cycle. Dalio, who has long defended China against global skeptics, is now showing concern about what lies ahead. If the biggest advocate of China in the financial market is raising red flags, we should pay close attention. The economic slowdown, the real estate crisis, and the slow recovery efforts signal that something much larger may be on the horizon. Prepare for tough times in the global market because China's problems are not isolated, they ripple across the world.
I think that there are real issues in China now, and they changed really in the last 4 years. And that is that they need a restructuring. A lot of the spending, well, let's say, individuals, 70% of their money was in real estate. Real estate has gone down. Stocks have gone down. Salaries have gone down. And so, and as a result, they're not spending and they're concerned and they're holding money in cash. With deflation, cash is a relatively good asset class. That's kind of the household and the business sector is in that state. At the same time, you have the government sector is a problem because most of the government spending, 83% of government spending, is spent by local governments. Those local governments got their money by selling land for real estate. Okay, there are no land sales, and they borrowed a lot of money, and those that they borrowed the money don't get paid. And so the question is, how are you going to get money into those places to operate? It's a situation that's more challenging than Japan in 1990. It needs a restructuring in order to be able to do that. And then there's also the question is the property values, the property ownership. Is it respected? And Deng Xiaoping during his period said it's glorious to be rich. Is it still glorious to be rich? So you have an environment in China which is changing and becoming a more difficult environment. So it's the time right now that you would see either is there going to be a restructuring and a getting past that? The innovation, yes, there's fantastic innovation. In terms of technology, there's nothing like it other than in the United States. Europe certainly isn't a competitor in that. However, it's very much government directed. Can there still be entrepreneurship and that inventiveness? These are big cosmic questions for...
Given the environment that you have just painted for us, is China still the place to do business? Is China still the destination for your investment money? You've said time and again that you should be invested in China.
Yes, I just want to be clear about the investing in China. In all countries, there are cycles and ups and downs and so on. And in no country should you invest so much money that it becomes a dominant portion of your portfolio. So in China, I still invest in China. The question is the size of the investment and how that investment is structured. So it's been a good experience for us investing.
What's the size and how are you invested? Because your report suggesting that Bridgewater, for instance, has been cutting down its exposure to China, its holdings to China for the last 30 years.
It's not my place to talk about Bridgewater's exposure.
But how do you see investing in China?
I see investing in China as largely a very attractively priced place that now has a lot of questions regarding the issues that I've just referred to. In other words, the economic issues and the political issues regarding property rights and whether it's still glorious to be rich and how that'll work. Therefore, there's a small percentage of our portfolio which is in China and will stay in China, through this process.